In business, Equity Bank Group CEO Dr. James Mwangi has addressed concerns following reports of massive layoffs at the bank that saw the lender send home close to 200 of its employees. Speaking to Citizen TV during the announcement of the bank's Q1 results, Dr. Mwangi noted that this was as a result of a conduct audit that all employees were subjected to following the loss of 1.5 billion shillings at the bank. Jimmy Mbogo has more on that and the bank's results for the quarter ending March 2025.
And I want to encourage customers not to compromise staff because you risk their jobs, because we will have zero tolerance on anybody who is conflicted.
It is a statement that sought to explain the recent firing of close to 200 employees at Equity Bank Kenya, with the lender now committing to release a toll-free number to allow customers to share their frustrations about staff who seemingly get in the way of service delivery.
Our customers should be served, enabled to realize their dreams without any inhibitions whatsoever. So there is no obligation for any customer to buy a staff lunch or to give them a tip or because essentially if we are now on the lookout, and that jeopardizes the position of our staff.
Dr. Mwangi was speaking during the release of the bank's Q1 result, where the lender's earning dropped to 15.4 billion shillings on the back of high inflation and currency depreciation in South Sudan. In the period ending in March, the lender saw customer deposits increase by 7% to 1.32 trillion shillings, allowing them to disburse 804.7 billion shillings in credit, a 3% increase in the first quarter of the year. The Kenyan business showed strong recovery, outpacing the regional businesses in key metrics, contributing 53% to the lender's deposit growth, 52% growth to the loan book, and 51% revenue growth, among others.
And so what has happened is that there is an inflation reporting last year, which contributed 3 billion shillings. That was last year. But this year, the inflation has remained stable. So there is nothing to register in South Sudan. So it's not that profit has gone down. Actually, profit has gone up by 8%. But when you reduce, you add the inflation accounting for last year in South Sudan, it looks like it has gone down by 4%.
Despite an improved performance by the Kenyan business, it continued to register high levels of non-performing loans at 19%, 200 basis points above the industry average, largely contributed by corporate loans, which stood at 26.7% in March, as well as MSME loans.
So we had taken a position that we'll be patient with the companies until we started realizing that the companies are running out, and we started the recovery process. Recovery process in Kenya, 10 people go to court. But so we have not been very successful in recovery, but we have been very successful in every case that has gone to court. We have won it because the documentation is right. So it's just a question of time.
The future of Equity Bank is brighter than the present. That is the assurance to Equity Bank shareholder and investors from the group CEO Dr. James Mwangi, who says that the prospects of the region remain positive. Jimmy Mbogo, Citizen TV, Nairobi.